Hello, everyone. Good afternoon, and welcome to the FinTech Association's webinar on the Straight Talk with all the CEOs of virtual banks. So this is the second in the series. We're very pleased to have with us a gathering of the CEOs and top executives of virtual banks that have a retail kind of focus. And also we are very pleased to have with us Benjamin Quinlan, our chairman, and also the managing partner of Quinlan & Associates, who has been working together with the FinTech Association in putting together the report that looks at what are the opportunities as well as what are the challenges of the virtual banking landscape in Hong Kong. So while people are coming in, we would like to remind everyone to please raise any questions you might have through the Q&A function at the bottom of the Zoom app. And then we will try to get to as many of your questions as possible. It's not often we have such a gathering of senior executives of all the virtual banks, so don't miss out on this opportunity to raise any questions you might have. So while everyone is waiting as well, this will be recorded and published across the channels of FinTech Association. So for those that are not able to catch us live, there are opportunities to follow up on this in the recorded video links. So without further ado, let me first introduce Benjamin Quinlan, our chairman and the managing partner of Quinlan & Associates, to give a quick rundown of the virtual bank report, which will lead into a very exciting panel that we are very pleased to have put together. So over to you, Ben.
Thank you, Helene, and welcome everyone to this, what should be a very exciting webinar. For those of you who haven't seen the report, please do download a copy either on the FinTech Association website or the Q&A website. They're both freely available, so a very interesting bedtime read. I'm really excited to have 5 of the executives here today from 5 of the 8 virtual banks to come and share their views, particularly as these are 5 that are predominantly focused on the retail market. For those of you who were on the call the other week, we were there doing a session with more of the SME-focused VBs last week. But really, as all of us being retail customers, I think the perspectives that are going to be shared today will really resonate and have a lot of impact and some key takeaways. Now, I guess for the purposes of my introduction, I don't want to go into too much detail, just a few minutes of some of the key takeaways of the report to set the scene and lay a foundation for context for this webinar. So for those of you who have read it, we started really the report by just mapping the Hong Kong banking market. I think a lot of people actually don't know how big or what the actual size of the market is or what it looks like in terms of the key competitors. And the first thing that we found is really the top 4 banks within Hong Kong, which is HSBC, BOCHK, Standard Chartered, and Hang Seng Bank, make up about 62% and 54% of the deposits and lending market, respectively. And in total, when you look at the size of the Hong Kong banking fee pool in 2020, our estimate for retail, commercial, and corporate banking was about 374 billion Hong Kong dollars. So this is just shy of about 50 billion US. The reality is the market is very sizable. Now, as retail customers who have long had to deal with the incumbents, I'm sure we've all felt the pain of actually dealing with brick and mortar banks. The onboarding process, setting up an account, lengthy waiting times, the digital offerings being a little bit haphazard. It's definitely not personalized. I still get phone calls asking me if I want a loan from HSBC, some random call center. A lot of the time, there's very little integration, and that whole remote servicing, what I would say, offering is a little bit underwhelming at times for many of us. And I think this is all an experience that we can feel. We all know that the incumbent banks are starting to digitalize, but I really think the VBs have got a big leg up in terms of their ability to move ahead with creating change across this industry. And it really has been, in my view, a catalyst for change. A lot of people think Hong Kong is And the reality is it is a very overbanked market. There is actually 172 banks currently operating in the city, 168 of which take up that remaining 40% of the wallet. But despite the fact that Hong Kong as a populace is very well digitalized, great mobile penetration, credit card penetration, internet access and speeds, we're not an underbanked market and we're not an unbanked market, but for a long time, I could argue we are an underserved market. Now, in the lead up to the launch of the VBs, the reality is quite a few initiatives were put in place to make sure that I would say the right support ecosystem was there. The FinTech supervisory sandboxes, the DLT, exploratory research that was done, the career accelerator schemes, especially now we've got the open banking API and the FPS and eTrade Connect. All of these put the right, what I would say, pillars in place for the launch of the virtual banks to take place. So the ecosystem has fundamentally matured in the right way. And if I look at the virtual banks, for those of you who don't know, 8 of them were launched last year. ZA Bank, Airstar, WeLab, Livi, Mox, and PAOB and Fusion Bank. And in terms of their offerings, it's pretty amazing. A lot of this is led by tech. And for those of you who have set up an account, you'll understand it's a 2 to 3 minute process with a selfie, a photo of your Hong Kong ID and address proof, and voila, you have your bank account set up. Now, of course, it's early days. There's no question that it's still early days for the VBs, and to even get to the point of setting up in such a short window is testament to, I guess, a lot of hard work that the CEOs and their teams have put in place. There are going to inevitably be some challenges as we move forward, building customer trust, mapping out that path to profitability, ensuring rigorous standards around data protection, talent management as teams continue to grow, and as well as what I would call a very intense competitive environment, not just between the VBs, but even from the incumbents who've all responded at first instance by slashing their fees. Now, in terms of that path ahead, I think the VBs are very well placed. One of the figures that we put in our report is that 2025 year-end path to profitability, you might be looking at a potential market size of $76 billion in revenue, which translates to about 19.3% market share. Now, that's an aggregated view across all the VBs. And we do think that is a achievable, what I would call aspirational target, but we are realistic that the path to get there is not going to be so straightforward. And there's a lot of things that we outline in the report in terms of the key ingredients to ultimately come out the other end successful. But in our view, we're looking at probably about just shy of 2 million customers opening up a VB account by 2025, mopping up about $560 billion worth of deposits, 381 billion in lending in line with the industry LDR, and more of a focus in particular on fee-based income. And I think the data advantage, which we call out that the virtual banks have, is really quite unsurpassed. If I look at the data or the infrastructure that's set up across a lot of the legacy incumbents, it's not really that effective. But with the big Chinese backers that a lot of these VBs have in place, with the plugins, with different telcos and other people within the ecosystem, the access to and ability to analyze this information to gain a better understanding of customers is really a prime position for the VBs to capitalize on. And right now, it's the journey to win the hearts and minds of the users. Now, I won't go into any more detail other than to say the last key takeaway was really what's going to make the VBs win. And we really draw out this idea of building this end-to-end closed ecosystem, right? In my view, a bank will not look like a bank in a few years from now. It will be a super app that integrates all of your investment, savings, spending, lifestyle habits in something in what I would call a one-stop shop solution that's very much customized and tailored to you. And I think many of the CEOs and executives on the call today understand that, and many have made actually significant inroads to move in that direction. But the early signs look good and promising, and I think I'm going to pass it over to Helene to let her talk to the VB CEOs to share their views, because I'm sure that is what you're interested in today. But if you haven't read the report, please download a copy. It's an enjoyable read. Thanks, Helene.
Hey, thank you so much, Ben. I think you take care of the first question from the audience that was wondering, where do you actually get the report? It's actually the report put out by both Quinn & Associates as well as FinTech Association that can be downloaded at both our websites, with the websites of both our organizations. And it's been put together through months of really hard work. And a lot of input across all the CEOs and their teams as well, which I'm very pleased to have with us today. So let me just do a quick round of introduction of the panelists that we have gathered here today. In no particular order, but ladies first, we have Carol Hong, Head of Product at Livi Bank. Hi, Carol. We have Eric Sum from Fusion Bank, Chief Executive of Fusion Bank. We have Tad Lee, CEO of CEO of WeLab, sorry, my apologies. Oh, something got into me, maybe not enough coffee. Apologies for that, Tad. And Ronald Lu from Airstar. Hello, Ronald, very nice to have you. And last but not least, Deniz from Mox. Very nice to have you here with us, Deniz. So I'm going to get straight to the heart of the matter, as it were. What's now and next is what we are trying to explore with this wonderful panel of CEOs and top executives. And in Hong Kong, we're trying to, as Ben was saying, we're trying to extra bank the overbanked, which is always a challenge. Because it's not an underbanked market, it's overbanked, and you are trying to extra bank them. So customer acquisition costs becomes one of the top things that you are trying to, address in trying to extra bank this overbank market. So maybe can I get a sense from each one of the panelists? What has been, how do you address that? What has been your approach in terms of, containing that customer acquisition cost while building up the customer base? Who wants to go first? Then I will go by alphabetical order. C, Carol, of first name.
Okay, so can you hear me?
Yes, loud and clear.
Okay, I think understand. I think there's a lot of discussion around the acquisition cost of a client, right? But I think if we look at it, for a client, we are talking about the relationship, a long-term relationship. So that's why we don't really just looking at the number. We more looking at I would say basically the value of the customer, because this is talking about a long-term relationship. And but before we get into what we mean by customer value, maybe let me recap a little bit. In Livi, we have a mission, and we also have a strong belief, which is echo what Ben just talked about. The future model of VB. We believe we are here to really create a totally different customer experience to the to the customer. And basically it's not about like today they plan their life around a bank for financial services, right? But on the other hand, it's us that embed the financial services into their day-to-day life, right? So that's why this is also why the partnership come about. I'm sure you're aware for Livi, we have three very I will say important stakeholder. They all are very good and come from a very strong background on their own areas, right? We have JD, which is it is an e-commerce giant that serve a big group of internet population. And then we have Jardine, right? Jardine cover basically everything you need for your day-to-day life. And we have BOC, a traditional bank that running a very successful financial business. The three together exactly is a good platform that we can serve our customer, right? So that's why we are working in a very different approach to bring a totally different experience to our customer. This is talking about making the banking experience so delightful and rewarding for them. Right, so when compared with the acquisition cost, this is much more that we can explore together with the customer, right? So that's why I would say the most important thing is we are able to really create some value to the customer, and eventually, they will like our service, they will grow together with us, And then, compare with the acquisition cost, I think that is not so important, right? I think I can share some of the example how this partnership is working well. I'm sure you know about, the YUU reward scheme, which is the biggest in town. And basically, we have a strong partnership because of the Jardine relationship, right? And we have some very small innovation that we have done, and we received extremely well feedback from the market. And in the old days, without VB, without people thinking of how to do things differently, the customer will have to go to supermarket to power up their reward apps, right? And then at the same time, they will have to pull out a card, or they will have to open another app for the payment. What we have done, of course, with the support with JD and also Jardine, give us a lot of ideas. We integrate the whole experience. So now, if you are a Livi customer and then you are in one of the Jardine outlet, be it Manning, 7-Eleven, Welcome, KFC, or even Pizza Hut, you just power up the Livi apps. You'll find your YUU membership number there, and also the balance, everything that you see there. And at the same time, you can switch to our payment tools, which link with a QR code. And so the entire experience is like only 3 clicks. You will be able to complete the loyalty recognition as well as the payment, right? So this is the experience that we will never, have before if we don't have VB thinking out of the box. And also looking at the numbers, we really see the customer really like these features. We have more than half of our portfolio that they are using YUU and also the QR payment, right? So I would say this is a small step forward that to delight the customer. And then basically because of this, right, I really see they are staying with us and they are using, the tool so well. So I would say the acquisition cost is only, something that we get them on board and then to grow with us. So this is what we mean by, the customer value.
Great, thank you so much, Carol. So if I hear you correctly, it's creating customer value over customer acquisition costs.
Yes.
All right. So the other perspective, again, we go by alphabetical order of the first name. So after C, I believe it's D. So over to you, Deniz, the floor is yours.
Thank you very much. Good afternoon, everyone. Thank you for inviting me. I think, what I should say, we in the beginning, we discuss or, we talk about, this, is Hong Kong, underbanked or, unbanked? Obviously not. But Hong Kong is an underserved market, and it's still like that. So that's why we have all these virtual banks, digital banks in Hong Kong. And on the definition of underserved, it's obviously in Hong Kong, we need more digital services end to end, to solve the problems of our customers. Today, Mox has around 100,000 customers onboarded already, and 100,000 customers in Hong Kong. We didn't get them full of marketing, or we didn't do any TV campaigns or billboard or this kind of stuff. We believe that cost of customer acquisition, it's a very relative terminology that you have to calculate in a very scientific way. So I know how much I'm spending for customer cost of customer acquisition, but is it expensive or cheap? It depends how much one is, of course, lifetime value, LTV of your customers, plus, how much is your cost base, plus, what is your expectation from these customers, in the future that you can create, different values, for them also, for the organization. For LTV, for example, if your cost of customer acquisition is 1-to-1, which means, you are doing a mistake. If your LTV cost and LTV to cost of customer acquisition cost is 3-to-1, you are doing a good job. If it is 5-to-1, which means market has a huge potential that you have to spend more, which means you are going to get more. You have to get more customers. There's this scientific way of doing this, and in Hong Kong, people believe that cost of customer acquisition is too big. No. I think it's not that big. We have been doing digital marketing only since day one, and we are operational in the last 200 days in Hong Kong, and I'm talking about 100,000 customers without doing a big traditional marketing, and my cost of customer acquisition is less than a lot of traditional businesses in Hong Kong, and it's cheap. I should say. So that's why that's an important thing. And the other idea that we have to look at this business. So customer number per employee, you have to look at it. Instead of looking at cost of customer acquisition numbers. Today, Mock says our customer number per employee is 550. Is there any traditional business in Hong Kong that they have this number? In Hong Kong, traditional banks, they have 150 or 200 maximum. So if you are serving 550 customers in with one employee, so your cost model is totally different. And if you have a different cost model, that you can serve your customers in a different way. And the last thing I want to share with you, I think we are going to see this in a couple of years, 1 to 2 years, in Hong Kong. There's a big transition to somewhere that we are going. You do not need to focus on only cost of customer acquisition. You have to focus on hard share. I've been sharing this every time, and this hard share will take us somewhere with customer experience, with different products and services, and then customers will come to us, and then cost will be low, and also our value for our customers and for our banks, it will be totally different. Thank you.
Thank you, Deniz. I think you added two very interesting facets to that conversation. It's not just looking at the customer acquisition cost, but also the LTV, the lifetime customer value, as well as the cost to serve. So you're looking at the employees versus customers. So I think that's really interesting as well. Very exciting journey ahead, I'm sure. So after D should be Eric. So Eric, please add perspectives from Fusion Bank to this. Thank you.
Thank you, Karen. Thank you, everyone. And thank you for the association to give me a chance to share my opinion with you guys. I think if you look into acquisition cost, customer acquisition cost, I think in the very beginning, virtual banks are doing something that let the public know what is virtual bank. Right now, what we're being asked the question is what virtual bank can do for them. So people start to ask, what the hell of difference between virtual bank and the others, and what the virtual bank can do much more than the other banks. I think from the acquisition cost perspective, we look into, say, marketing costs or else advertisement costs. Those costs, what we've seen is kind of short-term costs, which for us, it would probably be an invitation for the customer to try our services, to let them know, to experience our services indeed. And from our outset, actually, acquisition costs, again, answer you shortly, is when I talk to my colleague, is huge for us, because what acquisition cost means by me or by our organization is customer value, in fact. So if you look into the first step, we try to engage a customer from the design side, feasibility study side, we start to invest on acquisition of the customers. So if we look into, we believe that customer value drives by how deep we understand our customer issue, how much extent we can contribute in respect of those issues, and what is the extra customer value we can drive out of these services. So all sort of things, these things is embedded in our daily life in preparing and designing our product indeed. So if you look into acquisition cost itself, what I mean is actually is from very starting from designing, feasibility studying, testing, participating, implementing, and running the product. And that's what I call acquisition cost indeed, because the whole route of thing end up will be customer experience indeed. So, and from that angle, we believe we have justified and we confirm that we continue to invest on those. And then we found that, and we just launching our business since last December, which it is now our probably the 5th month of our business. So we have some great feedback from customer, which actually telling us that we have continued to invest and continue to boost up all the services experience indeed to the market, and to carry on with that regime to invest on the acquisition cost. So from our outset, probably what we do next is telling the customer that actually what the customer value we can deliver for them.
Yeah, thank you so much, Eric. I think that's also very important to bear in mind that you have to look at it holistically, everything in sum total. So thank you for that. Ronald, how would you add to that from Airstar's perspectives?
Yeah, thank you. Thank you. Hi, everybody. I think the first thing is about Benjamin's comment, right? It's about the overall, is it a space overcrowded with banks, right? There's 160 something banks in market, but in reality, there's less than 20 banks who actively involved in retail side, right? So if you look at the Hong Kong banking report, right? So the overall revenue, total revenue for bank, for all the banks putting together is about 440 something billion, right? Profit before tax is 250 billion, around that. So I guess it's just enough space for X more virtual banks to play around, right? So if you say we can grab like 19% of the market share, that's huge actually, right? So I wish you are right. Back to the customer, I guess Deniz and Eric and Carol mentioned that virtual bank actually is quite different from traditional banks. Airstar, I think our slogan is everyone is a superstar. So how can we do that? Is what with Deniz said, our service to the customer, the unit cost to serve a customer is much lower than traditional banks. That's why we create a space, create a room to give back to the customer. That's eventually, I guess one is the real benefit to the customer. Another one is the experience, customer experience, what Eric mentioned about it. So we invest in, I think all of us invest in the customer journey. Try to improve that. Try to give back to the customer. Try to create a different model other than we are sort of different choice for the customer to choose either in a spending side or saving side or borrowing side currently. So that is something different. So yeah, if you got a choice, you are the boss, right? So eventually the customer will win from this competition. Thank you.
Thank you very much, Ronald. Indeed, through all this, I think customer would be the ultimate winner, and I think there's nothing wrong with that, because along with that, then many of us will win as well. Tat, thank you for being so patient, because on the alphabetical list, so please add to that perspective. Thank you.
Sure. I think all of you guys have made great point. I mean, from Carol, Deniz, Ronald, Eric, you guys mentioned a lot of great point, right? So on this, let me try to put it in a little bit different perspective, right? And first of all, the thing is, I think when we talk about acquisition costs, I think probably next time we should also try to get some of the insight from Watson from ZA. I mean, they are the one. They have very different view as well, I believe. So on that, let me share with you how I think about acquisition costs, or go back to the original question, how to manage the acquisition cost to optimize return, right? Definitely, I mean, no doubt. We always need to look at the lifetime value, experience, hardshare that are always mentioned by Deniz as well. I think generally speaking, at this point of time, I mean, to be very honest to you guys, I feel like for all of the WeBi, we have not yet unlocked the potential of the virtual bank for now. Because if you look at the product as of now, or if you look at the technology bit of the virtual bank as of now, we are doing better. We are changing the market. But whether or not we have already unlocked the potential of a virtual bank, I believe we have not. So that's why at this point of time, in order to acquire customer, we definitely need to pay a little bit, right? So that's why if you look at the market, a lot of different virtual banks, they do have different approach, right? Some will go through a partnership, some will go through like a branding related campaign, some will do a little bit more on social things like that, right? And whether or not that acquisition cost makes sense, it always depends on the eventual lifetime revenue that the customer will be able to generate. So it's always like a formula like that, right? Dennis also mentioned about that, right? But again, for now, because of the revenue product is not yet there for most of the virtual bank. So that's why we always need to spend a little bit more effort in order to get the customer to have a start trial. They need to start to trial the virtual bank, right? Because if you look at the market, Hong Kong, again, it's not an unbanked market, right? Everyone have multiple bank accounts. So if you want to get them to try, you need to get them to start with something, and the acquisition cost or the acquisition offer will be the hook of that, right? But that's not enough, right? So right now, what we need to look at is on the deep engagement. So all of the CEO or the senior executive also mentioned about that. We always need to look at the deep engagement level, the loyalty, the daily active ratio, the product penetration, the recurrent behavior. It's all should be considered in one go. And for WeLab, I think the way we look at the KPI, again, it's not just from the financial perspective, which is on the acquisition cost or the revenue, right? It always will be depending on the product penetration or the recurring percentage. Say, for example, for us, the percentage of people using multiple products within WeLab is talking about 80%. So basically, people, when they are on board, they are just not open a bank account or just put money there. They will have a 80% of chance to use other different products. So that is always the way we look at that. But if in the longer term, I think the more important thing is we always need to find a way to unlock the potential of the virtual bank and come up with more innovative product feature and also service in order to make sure in the long run, we will be able to serve the customer even better. And eventually that will be in return generating even more revenue to the bank as well. So that's how we look at that.
Great, thank you so much, Tat. I think, this very comprehensive perspectives that everyone has shared. Ben, anything you want to add to that before we jump to the other questions?
I fully resonate I support the last comment that was made, particularly, look, scalability makes a lot of sense, obviously tech enabled, and just the ability to amass customers with such a small workforce is quite impressive. But I 100% agree, the true value, and that's what we call is the data play, when you really have those interconnected spokes of products and you can understand customer behaviors across the entire value chain and the various lifestyle patterns and spending and so on. Only when that's mapped out does the exponential growth in product push and suggestions and other parts of the ecosystem come into play. And that will naturally be an area as the VBs mature that I think they'll crush the traditional incumbents. So because they just don't have the capacity to look at data in the same way on a multi-product dimension. So very excited to see how that pans out.
Yeah, thank you, Ben. I want to remind everyone to please send in their questions. If they have any for all the CEOs and top executives. It's not often we gather all of them in one panel. So, we are very, privileged, and thank you again for that. So please, fire away with your questions. Now, I do have a second question in mind to explore with everyone. As Carol mentioned earlier, the building partnerships is very important as part of the customer offering. Whether it be with YUU or some other, merchants and business partners. So I just want to get everybody's take on that. How do you see building partnerships as crucial to your offering? And if so, some examples maybe. We go back to Carol first.
Sure. Yeah, partnership is extremely important for us, and for two reasons, right? The first one is we really have the vision to embed the financial services into the day-to-day life of our customer, right? So it's no longer that, you plan a trip to the branch or a plan, for financial activities. If we want that to happen, we will need a platform, so basically the product or the service is delivered through the natural, customer journey and activities, right? So that means we won't be able to do it ourselves, right? So emergent, I think, going forward, when you are shopping, you will be able to apply for a loan at the same time, right? So this is how you don't make an effort to enjoy the financial services. So this is, the great partnership. For one is to enhance the customer experience. And the second one is very important to, all the cost discussion that we have here, right? So only when you have a great partner do the same thing with you, addressing the needs of the same segment, you will have the cost synergy, right? You have the cost synergy that you don't have to really have another acquisition program to approach the same customer. And the second thing is you also can put together, all your budget to give the customer the best value that they want, right? For the things that they want to buy or the things that they want to have, right? So fundamentally, a great partnership is for the better customer experience and also for the cost synergy for a better business model. Right. So I would say, this is something that is very important. So that's why, since start thinking of like to build up this company, we already, carefully select different partners so that, to enable us to move into this kind of like platform marketing.
Right. Thank you. Thank you so much,
Hey,
Carol.
sorry, and also one more thing. I almost forgot about one thing, because when it comes to partner, right, it's not just about your business partner, because I think the customer is also our partner, is part of the ecosystem as well, right? So I think in Livi, we're also been engaging our customer quite a lot. I just want to share last very interesting observation that we've seen. We've been, we have open business for almost a year. If we look at where where we get the customer and then, how we onboard them, we find out, because we've been doing quite a lot of like customer engagement, we find out more than our customer are coming from the MGM channel. It's basically the referral, right? So 50% of it worth a lot of like budget, right? So this is also the power of partnership, partnering with our own customer as well.
Absolutely. There's nothing more powerful than word of mouth. Deniz, how do you see partnership with Mox?
Yeah, I think partnership is our main differentiating point in the market. We have two partners. One is Hong Kong Telecom PCCW Group, and then the other one is Trip.com. As you know, during the pandemic, and we don't know what will happen next. Unfortunately, it's super difficult to talk about travel. And as you know, before pandemic, travel was one of the most important area, for Hong Kong people, right? But now it's a bit different. But I'm 100% sure that it will come back. And once it will come back, it's going to be an interesting game for us, with our JV partner. But on the other hand, I think how we are leveraging our partnership. I always talk about two important things. One is distribution channel. The second one is, of course, creating services to touch the daily life of the customers. If you have a partner like Hong Kong Telecom, from mobile to landline to internet to TV in broadcasting, they have a lot of different services and companies, and they touch the daily lives of the customers every day. So what we did, I can give an example. I think this is a nice example. I'm sure you know that we launched our credit service, credit card, first credit service, last week. Our credit card last week, and we are inviting our existing customers now. And what we did, in this credit card, there is one service, we created, with Hong Kong Telecom, which we call it, Hong Kong Telecom Bill Switch. Under Hong Kong Telecom, there are 6 different companies. And if you have a standing order from a different bank with a different credit card for Hong Kong Telecom bills, what you can do, you can come to Mox, and there will be a area that you will see on the dashboard. And when you click on it, I will ask you, do you want to bring your Hong Kong Telecom bills, to Mox? And if you are going to bring them, to Mox, you will get 5% cashback every month. So why I'm saying this, that 5%, we believe that people, they want to save more to make spending more logical for the future steps. So that's why we want to give this kind of saving opportunity for the customers. Once they pick this, they select this, they are going to see their all bills on the screen. And once they say, yes, I want to switch, all my bills, to MOX, it's done. They do not need to do anything. They do not need to go to any other bank to sign something or to do any changes. So all these bill payments, they will come to MOX credit card directly in a couple of days, and then we will continue to follow your bills every month from MOX with 5% discount. So this is a service example that we want to create and build with our partners. It should be seamless. It should bring customer to MOX, but at the same time with a value, with a different experience. This is what we are trying to create. This is what we will continue to create with our partners. There will be 3-4 this kind of seamless service integrations between MOX and partners. The last thing is I think our ecosystem, which we call it funding merchants, they are so important for us. And these funding merchants, we work very closely. One of the really good example of that is Foodpanda. I can share a name here, and Foodpanda, they are working harder than us to create customers to MOX. And to be honest, this kind of an ecosystem, this kind of a integrated working groups, I think it can bring a lot of customers plus different values to the customers.
Yeah, thank you so much, Deniz. I think it's very interesting you touch on how that collaboration, that true collaboration, will help to build kind of win-win partnership, both for the merchants as well as for the virtual bank. So thank you for that. Eric, can we have your perspectives from Fusion on the partnership side?
Right. I think partnership is important to us. If you look into customer aspect, customer doesn't care what the bank is, but they do care what the banking services is. So everyone needs banking services, not necessarily banks. And I think Simon got it right, is that when you ask for the customer whether they need services is a very, very important things that we match the customer wants. As by the time they need the banking services, we appear next to them. So partnership for us is very important. If you look into what Fusion do, we do have actually a customer experience center set up to show to the public that how important is partnership is. We demonstrate a lot of partnership possibility in the experience center. So I encourage you guys, if we open up after COVID or sometime, you can visit our experience center to look into how partnership can create further customer value on top. So indeed, for us, partnership is the driver of an ecosystem. And if we want to really embed our services, banking services, into a daily life customer, we have to have great variety of partner. And that partner is where I think in selecting partner or we engaging partner is from the sense that where we can find the customer value growth, that will be the partners we're going into to get them on our equation to make sure that customer value can be embossed.
Yes, indeed, Eric, thank you so much. I think putting that customer at the center as you build that ecosystem, it's absolutely key. Ronald, so there are many superstars in your partnership. Would you like to add to that conversation there? Thanks.
Yeah, thank you. Yeah, we did have a lot of superstars. Last Christmas, before Christmas, we partnered with the TV program. We sponsored ViuTV, right? So we create a lot of stars. So that's what Airstar Bank does. Back to the partnership, right? So I think we have put serious thought on that. So other than the payment scenario, so every customer will encounter during day-to-day life, right? So other than that, what kinds of things customer need? Last year we did if a partner with potential to explore the possibility to get closer, right? So the idea from us is to enable our partner with banking service. It's not just, I can help you to lower your merchant fee or whatever kinds of a transaction cost, but really bringing the value to our partner. So there's a multiple partners talking to. That's something I think we need to think seriously. A virtual bank, how a virtual bank can benefit to the other industries. I cannot mention too much here, but I guess the thought is to enable our industry partner with the banking service. Can we create a space for them? A insurance and bank type of collaboration? Can we bring a banking service to insurance company? That's what we are trying to do.
Yes.
Thank you.
Thank you so much, Ronald. I think adding on the different facets of services, including like insurance and other aspects. And we got a few questions from the floor as well that touch on that. But before that, Tat, what are your perspectives, from WeLab, in terms of building out that partnership in your customer base ecosystem?
Sure. Partnership is no doubt extremely important. But we do see in a slightly different way, if we compare with how the traditional bank, they run their partnership, right? If you think about that, right? Traditional bank, they run their partnership by working with someone with sort of like a large customer database or with a lot of distribution channel, things like that. Because the thing is, they want to kind of create like a promotion offer or partnership offer to sort of boost the usage of some of the banking product. So that's always the traditional bank is thinking about, right? But for virtual bank, we think partnership can be something even more exciting and interesting. So when we talk about partner, apart from finding a merchant partner or finding a partner that can generate more usage of your banking product, we always look for partner that can generate some more strategic value. So for us, let me give you 2 examples. One of the things is we partner with Allianz. I mean, we are sort of launched our fundraising culture last month. Allianz is one of our strategic investors. And what we're going to do with them is we're going to co-develop a wealth tech solution. Because sometimes you are good in using technology. You're good in doing something that is the customer very interested in. But also sometimes your partner can also contribute a lot as well. So this kind of partnership, we feel like is also very important for virtual bank to think and to explore. And the another example is even for the marketing fund, actually you can do a lot of interesting partnership as well. What we have done is, because we know that the target audience or the target customer is actually sort of like a millennials, they love watching YouTube, they love watching like a Korean pop music, things like that. So we also did a partnership with YouTube to sponsor the first virtual concert of a Korean girl band, which is Blackpink. So that is the things we're trying to change the way people look at partnership in the market. I think the good thing is, unlike traditional band, they have a lot of legacy, or the way they run is probably more or less the same. I think virtual band always have the visibility and also have the freedom to do something much more exciting and innovative, even in terms of the partnership itself. So partnership to me is not just about finding like a merchant partner. Actually, it's from all different perspectives to generate an even better branding or an even more interesting product feature, things like that. That's how we look at partnership.
Great, thank you so much, Tat. Now I want to take a couple of questions from the floor, which I find quite interesting as well, but I'm going to combine them a little bit because some of them overlap in essence. So the first one really is 2 aspects. What do the virtual banks see as important in improving the CX of the customer experience in order to sort of like, you know, be aware of the incumbents trying to play catch up in their digital offering. So that's one, you know, improving CX to fend off the incumbents. And secondly, you know, how do you see, you know, the other services? I know Ronald and also Tad alluded to some other services like insurance and others, but there are also like wealth management and so on and so forth, which some other virtual banks overseas also tap into. So, you know, how do you see, you know, the broadening of some of those services or adding on some of those services like insurance and wealth management to your existing offering? So those two aspects. Shall we, any volunteers to go first? Okay, Carol, you unmuted.
Okay, yeah. So I think customer experience is very important, right? As what we said, what we really want to do is to embed our service in our clients' day-to-day life. And so that is talking about, you know, the customer journey, how we deliver the service is very important. But I would say it's not just about, you know, mapping out the journey and give them, you know, something nice. I think there's a lot of like intelligence at the back. Right, it's talking about how to use the data before they come to you, and then you know what to offer them. And also most of, you know, more than that is like the service part of it, right? I remember, you know, during the starting, Ben mentioned about, I think one of the biggest pain points is for some of the customer, they think that banks still don't know them at all, right? Keep pushing a wrong product to them, right? So that's why I would say the best customer experience is talking about the use of the technology, the big data, the AI, everything to make, you know, the service so seamlessly, and also the product, you know, available to them at the time that they want it, right? So it's talking about the right product, right time, and also in right way. So this is all talking about not just, you know, knowing the customer. It's also about the use of the technology. And I would say virtual bank, given, you know, our experience, our expertise, we will be in a much better position to serve them compared with maybe, you know, the traditional bank, right? So I would say this is key things that I think we'll be able to do a lot more for our customer.
Thank you. Deniz, over to you. How does Mox fend off the incumbents? And are you looking at other service offering like insurance, etc.?
Yeah, we are looking for, you know, let me start, you know, from the second one. We are planning to, you know, offer, you know, new products. You know, this year, you know, we are going to, you know, focus on borrowing services. We started, you know, with credit card. You know, there will be, you know, some smart, you know, borrowing, you know, services, you know, coming up. And we are going to announce, you know, almost, you know, every 2 months, you know, we will announce a new thing integrated, you know, with our partners. It's not going to be only like, you know, one credit service or one loan service, you know, that you are going to, you know, apply. We don't want, you know, create a service, you know, a credit or borrowing service, you know, just like in a normal traditional way. Of course, wealth, it's going to be in our focus, but how we are going to position wealth in a different way. And I want to, you know, connect this, you know, with the first question. So traditional businesses, they see these things like, you know, retail business, right? And there's a lot of, you know, traditional segmentation models, plus, you know, they call it wealth. What is wealth, you know, for our customers? What do they want to do? They have money and they want, you know, save money. They want to borrow money. They want, you know, grow their money. And to grow their money, you know, we are going to, you know, bring, you know, new services, not only saving. Today, you know, we have saving. Tomorrow, we will have, you know, something, you know, to help them, you know, to grow their money in a different way. We can call it, you know, wealth services. We can call it, you know, wealth tech, but we will continuously invest on, you know, wealth tech. Plus, you know, we will bring, you know, new services, you know, on wealth side. When I look at the traditional businesses, the biggest problem, or, you know, the biggest, you know, thing, you know, I've been working in banking more than 20 years, as you know, and I work for, you know, a lot of, you know, big banks. What I can share is they see these things, you know, with only, you know, a couple of, you know, design things. We didn't, you know, build only a mobile app with a design. This is not only, you know, CX. I don't believe, you know, this kind of, you know, superficial words like, you know, CX, UX, UI. we believe the service design end to end. And if you want to do the service design, first you need to change your organization. And I'm not talking about another superficial, sexy word like agile. Do you have an organization to deliver like these banks that you are listening right now? If you don't have that kind of an organization to deliver differently, look at the products and services differently, you can design the sexiest app in the world, but you can't transform your platform like this. So that is the critical thing. I can talk about this not only from product angle, technology angle, also risk, compliance, FCC. We have to look at from a fresh eyes, and then we can talk about that traditional or incumbents can catch up or can do better than us.
Yeah, indeed. Thank you so much, Deniz. It's not just about that shiny new app or an extra level of tech. It's also about the organization and the readiness really to move ahead with that. Eric, what are your views on this?
I think I want to ask you questions answer the question on to about the CXOs. And in fact, I think one thing is that we play very important is customer value, which we're going to drive. So in all the, including the design, the hitting customer pain point, I think to improve CX, the first thing of all is that we have to make sure that what the very clear definition on what the customer value we're going to drive from that product. And then from that angle to do all the designs, implementation. We do also see, listen to feedback, but feedback for us is kind of the third and fourth layer of what we should do. So the third thing is from CX point of view, I think importantly, we have to make sure the pain point we address into can drive up the customer value also of these things. So this is I think that's crucial for us in the product design angle, in fact.
Yeah, thank you so much, Eric. So over to Ronald.
Yeah, I think the customer experience is important, but I guess Airstar Bank's approach is whether there's a pain points we can solve and deliver a different approach to the customer. I guess it's a kind of rethinking on the whole process instead of just delivering an ad, right? With this kick. But underlying there's different brand process, different kinds of risk control. So we have to think it through. So why we need this field or not that field or whatever information we captured, and we simplify the overall process. I think it's more than just showing the user interface to the customer, but underlying there's we engineer a process underneath. On the wealth management side, I guess yes, I pretty agree with Deniz about the whole customers lifespan. So they spending money, they save, and then they go their wealth. And we had to think about Hong Kong people used to many knowledge worker, they work for their financial freedom. So how can we create space for them to SL or to gain a lot of capital from that end? So how quick can they be financial free to spend time on what they want to be? That's the approach. I guess we will invest in that too, right? No doubt about it.
Yes, thank you indeed, Ronald. I think that is very true. Pat, your perspective, please.
Sure. I think being the last one, the good thing is I can always summarize all of the points you guys mentioned and then just repeat it again, right? But I tried to do it a little bit differently this time. I think first, in terms of customer experience, right, CXO, right? I think right now, probably 2 years back, when Deniz and I were sort of in the same panel, we will mention about customer experience. But right now, I think customer experience is no longer the differentiating factor. Everyone will talk to you about the importance of the customer experience, and even for the traditional bank, everyone will put a lot of effort on customer experience in terms of the design, in terms of the UI, UX, in terms of the experience from the apps, right? So customer experience is actually given. So basically, no more differentiation. So everyone need to make sure you are doing a good job on that, right? I think the more important part is I think the differentiating factor for a WeBi versus a traditional bank right now is the tech-driven mindset. I think if you look at the bank, right? If you run a bank, probably for all of us, we know that running a bank is actually difficult. It's not just about business marketing. It's all about like risk management, LNC, like alcohol management, a lot of different things, right? What we should do better is make sure every single function or every single piece happening in the bank should be tech-driven. If you are able to do it in that way, you always will gain the efficiency, and you will always be able to an even better job. And you can connect everything into a one bigger picture instead of everything will be isolated, right? And from that, the second question is more about wealth management or insurance, and that is also similar to this one, right? If you think about today, right? I do still feel like everyone now they want to bank with multiple banks because of different uniqueness of the product. Say, for example, you may have your saving account with one bank, and you are using another bank of the credit card, and you use different wealth management from the third bank, right? Things like that, right? Everything is not connected. So apart from talking about the whole ecosystem, so one of the things I think virtual bank will also think about is how can you create a stronger inner ecosystem among all of your products. So from wealth, from insurance, from spend, actually they're interconnected. But in the old days or in the traditional bank, because you have a lot of different functions, you have a lot of different departments, they are always looking at the things in a very siloed way. But I think with virtual bank, we start to build things from scratch, from the people, from the structure perspective, we design in a very different way. I think that is actually one of the advantage for us to make sure everything is connected. And also from time to time, we will be able to create even more product and better product to fulfill the need of a customer whole journey.
Indeed. Thank you very much, Tat. I think very well summarized. It's the alphabetical order that puts you in that position, unfortunately. So this last question is a summary of a lot of things actually that I wanted to ask as well. So I'm glad that this is last. But for this last question, I want to go to Ben first, because it touches on a few things, like how do the virtual banks here, are different or similar to other virtual banks in Europe or the US, which was touched upon in the report. And also, if we have a crystal ball to look ahead, what does the next 3 to 5 years look like for all of you? So over to you first, Ben, if we could.
Yeah, I think the dynamics of the market are pretty comparable to places like the United Kingdom. You've seen the VBs in the UK, however, focus on, I would call it, the size of the market relative to the populace isn't as large. Hong Kong is still pretty sizable. And when you're looking at, let's say, the average deposit balances at a bank like an HSBC in the 400-something thousands, Bank of China, 500-something thousand, these are pretty sizable retail deposits compared to the West. There is a bit more of a savings culture ingrained in a market like Hong Kong compared to a market like the UK. Now, I think taking those savings and then making them go to work is an important aspect of where the VBs can differentiate. And I would just say they're at a much earlier stage of their maturation process. The more interesting thing for me is not drawing the comparisons with places like the UK, it's drawing comparisons with the VBs that will pop up in markets like Singapore. Because when you have a player like Grab in the market that's already established connectivity with so many of the customers that it would ultimately look to target, with multifaceted consumer-facing financial services, delivery, ride-hailing, that is going to be an interesting play, because the customer acquisition will be, you can imagine the journey, you hail your next ride and Grab, and it says, would you like to open up a Grab bank account? Get 10% off your next Grab trip, right? As a payment option, why use a credit card? Go with Grab, right? It's about getting really close to that customer journey in all parts of their life. I can't stress that enough. And it goes back to that differentiator around understanding data, but along the entire life cycle in that closed ecosystem of the customers that you service. Because banking is a service for the action of the individual, right? It's not what people think about as first port. So you need to ultimately intertwine with that action and activity at all phases and just make it become seamless, not this additional option where people have choices and they need to think about it. You want to avoid that. You want to basically wipe that off the map and just say, go with us and you get the best rate, right? There you go. It's on their plate. It's as simple as that, really.
Thank you, Ben. Very, very, very aptly put. I think, embedding it into that whole, threading it out throughout. I think it's so important rather than bolting it on, afterwards. So looking ahead 3 to 5 years, what does it look like for all of you? Maybe we start with Tat first in reverse alphabetical order. How about that?
Sure. I think if I get the question correctly, probably you are talking about 3 to 5 years, how the VB will be like, right? I think probably less than 3 years of time. In 1 or 2 years of time, you will not hear anyone talking about VB in particular. I mean, because everyone will turn into like a digital bank or technology-driven bank. Even for those traditional banks, I think they are doing a lot of transformation to make sure that is happening, right? So 1 or 2 years later, it will become like everyone will be talking about completely digital banking experience. And also, probably to me, I feel like within a certain period of time, you will see like lesser and lesser branches in the market as well. I mean, probably if you look at Citibank. I mean, Citibank quit their consumer market in 13 of different countries. I think one of the reasons behind is if you are still relying on the old model to run a consumer bank, probably that is not the most effective way to do so. So to me, I think probably 3 to 5 years later, everyone will be focusing on a complete or a solely digital banking experience. And by then, I think the winner of the game will be always the one who can make good use of the data and who are really understanding enough the market need and create an innovative product and feature that can serve the market. I think that is how I see it.
Yeah, thank you, Ted. Very true. So, VBs are working hard to make just this term maybe a little bit redundant in a few years' time, that everybody look upon digital, banking experience rather than virtual bank versus non-virtual, bank. So, Ronald, how about you?
I think will be like a normal bank. There's no big differentiation. But say I will spend my daily spendings with most or Livi card, right? Or using CA's bands, Lici, and customer will borrow from Airstar Bank, of course, right? So presumably there will be like a lot of people choose virtual banks as one of their choice. I guess we may specialize at different areas, right? And of course, a customer will have multiple virtual bank accounts, right? So if I were the WeChat user, so of course the Fusion Bank will be natural selection, right? And spend probably another kind of service. I guess 5 years from now, right? So there may be like more than 1 million or 1.5 million customers. probably will experience virtual bank service. And there will be multiple types of banking service or investment service. I guess that happen very naturally. And SME, of course, we are. Ben usually invite me to SME as well, right? So we are preparing for SME launch, right?
Great, thank you so much, Ronald. And turning to Eric, Fusion Bank's perspectives on this looking ahead.
Thanks. I think from the customer's outset, definitely customer will be benefited. From the outset of more options to the customer, more financial inclusion tools will be given to the customer. I think, and also at the same time, because of the development, I quite agree with what Tak said, is that actually currently we segregate banks from traditional bank and virtual bank. Going forward 2-3 years, probably every bank doing similar thing. They are all heading onto, I mean, it's not difficult to see that every bank is heading onto ecosystem itself. So I think going forward, it's hard to tell what is virtual bank. And in fact, I think all the benefit will go into the customer. And also because of the device, because of the nature of the virtual banking, the customer may have more option, even though cross-border banking will be enhanced in that outset. It probably be say, well, in Hong Kong and China and outside Southeast Asia and all sorts of the world. And subject to the legal perspective, but virtual bank do lay down to a very good infrastructure onto you can banks everywhere. So probably that will go into the customer in 2-3 years time. From the banking industry outset, probably what we found that the more usage of RegTech in detecting, monitoring, reporting, and also I think what important is that the big change in enhancing the cybersecurity of how to do banking will have kind of evolutionary changes in coming 2-3 years. And so to enable the customer to a bank on a more safety way, more secure way. So a lot more technology to impose in there, to invest in there, to make sure that all this what Hong Kong as an international financial center to move on into the next step. So that's what we seen in coming 2-3 years probably.
Yeah, thank you so much, Eric. Indeed, RegTech and cybersecurity are huge issues to address as we move forward. Deniz, what does the crystal ball hold for you and Mox?
So what we want to do as Mox, first of all, I think there are a lot of different items that Mox will focus on, but I think we have to focus on the people and talent side much more than the other sides, because I think that's the most important part of the new banks with these virtual banking licenses, right? And what we want to do, we want to create the best technology delivery, customer, product, risk teams in Mox. So this is our aim. This is what we want to do in Mox. But other than that, of course, there are a couple of areas we are going to focus on. GBA and Greater Bay Area. It's going to be super important for us as well, but we have to understand what will be the reasons of the people in GBA to open a bank account in Hong Kong. We have to crack that first, and then we can do it. As we mentioned before, Mox is going to Singapore. This is public data, so that's why I think I can share this. In Singapore, we will do something, understand the charter, and with our with some partners. Other than that, interoperability of the bank, it's super important. Today, our bank is 70% portable. From here to somewhere, we can go easily. 70% portable. I think that's something we have to consider. I saw some questions that are you planning to open or launch it in Europe? Who knows? I mean, if there will be an opportunity in the market, with a different value proposition, it's also possible. As I said, we will continuously focus on WeLab and RegTech. We are using 2 RegTech companies right now in Mox, and we will continuously look at these areas. Last thing I want to share. I know there are some, interesting models, coming from Singapore or, some other, areas like, some non-traditional players. They're entering, markets and they want to touch the daily life of the customers. For borrowing services, it's easy, but I just need to, remind, to everyone, we are a bank, and people, they don't, bring their money to a taxi app. Okay, so it's not like bringing putting your money 500,000 Hong Kong dollar to a taxi app. It works quite differently. We will see this kind of changes in the future, but which future and when will it happen, we have to discuss. My consideration is in the next 2-3 years, it's going still trust is so important, and we have to gain the highest trust level of the customers in Hong Kong or in different markets as new banks.
Yeah, thank you, Deniz. Trust is indeed at the core of any banking service, be it virtual, incumbents, or wealth manager, whatever. Carol, over to you.
Thank you. I think now I get the benefit of being the last, right? So basically, I agree all what have been said. And if from Livi perspective, from our perspective, we've also been discussing, the future business model. I would say in 3 to 5 years' time, for sure, I think in terms of the service delivery, we will see a lot more happening on the digital space, right? So as what like Ted said, I would imagine there will be a lot less branches, right? But I would think, the whole evolution will be more drastic as well. I would imagine 5 years down the road, probably you will see some of the services well integrated into the ecosystem, right? So basically part of the bank services will become invisible, right? Because I think you will not be really, notice that bank has already provided the service to you, because that has become part of your, service. We will see a lot more, you get the product along your decision-making journey, right? So I would think this is a big trend, and also agree there will not be VB, because I think every bank will become a VB, right? Because basically it's digital-driven service model. But I would think we also need to be careful, because today we're more comparing VB with the traditional bank locally. But I would say going forward, it will be very global, right? Basically, you will be competing customer with Singapore, maybe with London for offshore banking. So basically, not just VB, I think for all the incumbent, we need to be, aware of the trend, and the competition is not just about, digital and non-digital. It will be, different economic zone as well.
Thank you so much, Carol. Ben, any final thoughts on this, on everything that has been said?
I'm just grateful that there's some new life into the Hong Kong banking industry. For so long, it's been sitting idle. All these innovation days and ideas about let's innovate and let's market innovation, but very little progress. The VBs within 1 year have come out and at least made the process of setting up a bank that much more pleasurable. And I think that with the ethos that many of them have in place, in the ability to leverage tech as the core foundation, not be plagued by legacy, things like mocks on pure public cloud infrastructure, multi-cloud for WeLab, it's really cool stuff. And I think when you have a digitally native approach as you build out, the overall end delivery for Hong Kong is going to be a plus for the consumers. And as you're seeing, many of the incumbents, some are a little bit snooty and turning their noses up. Others are mindful that this is genuine competition. And the reality is, as all of our brains have rewired and we're looking for a fundamentally different experience, the lag that will be created by incumbents still trying to transform, because it's not going to happen that quick, is going to be painful. And people will say, well, look, I'm just going to go with the option that actually works right now and that delivers me the expectation that I have as a consumer in what is a fundamentally digital age. And if you can't do that for me, then, then I'm not going to give you my business. So I really do think it's not just the next gen that's coming through. People's patience often wears thin. And I think that the whole idea is if you can fundamentally differentiate and become so embedded in their life that it becomes second nature for them to use the app and to bank with you, then that's great. And obviously there is a way to go, right? There's a lot to build, there's a lot of things to do, but that's part of the excitement, and it's just good to see a breath of new life and competition in the Hong Kong market, which I believe we've needed for a very long time.
Yeah, thank you, Ben. And I can only add our gratitude to all the VB CEOs and top executives to be with us. I know, you all come from, very busy schedules to adjust your time for this. So we are very appreciative of that. And all I can say is that it's exciting times ahead. So, congrats on everything that has been done to date, and more excitement for the future. Thank you again. And, we'll sign off here. Thank you.
Thanks.
Thank you very much.
Thanks, everyone.
Bye.
Bye.
Bye-bye.